Hey guys, Leaf West. Making probably my last video of the day for looking at all the sort of tools I use for trading and what have you. And the last one here we're looking at is actual my pivot, my swing pivot tool, which basically paints these triangles at the tops of pivots. I have my strength indicator at 5, and all that means is that pivot highs and pivot lows are made when the preceding 5 candles, say for a pivot high, the preceding 5 candles have lower highs than that one, and the subsequent 5 candles have lower highs than that one. So obviously this doesn't get painted until you have 5 candles that close and are lower than that level. So this doesn't get painted until the 6th candle opens afterwards, and in fact the 5 candles before that don't exceed that level. So does that make sense? In that these take a bit of time afterwards to identify as pivot highs and pivot lows. So you don't have to wait for example, when this potential low was put in and I'm waiting for 5 candles to close higher to paint that, you don't have to wait for that to happen. You can say, you know what, I know this is a pivot low because price is not going to, the odds of price dropping down in one candle and taking out that low are small. So you can use that pivot low, and this one would be marked already. You can use that pivot high for a pattern setup. And I use these pivots to do contraction patterns and continuation patterns. So we go from high to low, and this is a continuation pattern. A continuation pattern, for those of you that don't know, that's not really what I'm trying to do here in terms of teaching patterns or whatever. I'm just trying to show you why I use these dots, because you can see the swing highs and swing lows very easily, and you can anchor on them and go from there. But anyway, so I would anchor on that, and the continuation pattern is usually at the beginning of the day when you price breaks out of a range and goes to make a new high and then starts to pull back, and then price will often continue higher and break the previous high. And so I have a sort of consistent way to play those. And what I do is I draw a grid from the top to bottom, and I'll watch price as it monkeys around. And the 61.8 level is the big area where I want to see price get above and hold. And in this case, price gets around the 61.8, but it's fluctuating a bit. It's holding above the 38.2, which is great. And then the gap area between 78.6 and the top of the grid is where I like to buy. Because what happens often is that price will move up and then come back and retest and then go its merry way. And what I would rather have happen is I'd rather buy in the gap so that when price pulls back, I'm not underwater automatically right away. If I bought on the break, like a lot of people do, like they're taught to buy the breaks, when this comes back and goes below their level, they get antsy. And often people will as price moves away, they'll move their stop up right away because they don't want to get stopped. They don't want to lose money on a trade. But what happens is the market knows this. It comes back and it stops these people out, and then it goes. So I like to get in early, get a better price, get a wholesale price instead of full retail, and then I'll have my stop usually below this structure, below the low pivot. Anyway, so that in essence, then here's your first target, and here's your second target on this continuation trade. So it's pretty straightforward, these continuations trades and contraction pattern trades. But in essence, I use these swing pivots just to identify contraction patterns and continuation patterns. I showed you already what a continuation pattern is. A contraction pattern is when you get a lower swing high and a higher swing low. So actually here inside this continuation pattern was a contraction pattern. And here is a lower high, and here is a higher low. So actually I could draw a contraction pattern there. And there's my grid for that. So you can see that the contraction pattern broke inside of the bigger pattern. Again, price pulled back, made a higher low. Again, you don't have to wait for this to be painted, but this one would have been painted already. So you can sit here and go, okay, now I know I have a I have a lower high, and I'm going to wait for a potential contraction pattern with a higher low. And when this candle was put in and price started to move away, you can actually get this grid in place. So price got above the 61.8. It was consolidating around the gap area. So there you get, this is where you get long. Right? And Bob's your uncle, and away you go. And actually on this pattern, we went up to the third, almost the fourth target, just about to the fourth target. So you just manage your trade however you want to manage your trade. So that's really, in essence, how I use these swing pivots, and you can see them on the bigger charts as well. Let me get the bigger chart up here. Pause this. All right, so here's Apple, the 15-minute chart on Apple, and you can see all my swing highs and swing lows, and you can use them for your trades. So you could have said, okay, you know what, made a new high here, and we're pulling back. So this is going to be a continuation pattern. One big motherfucking continuation pattern. So you could just keep drawing your pullbacks. So here's the continuation pattern. It's a big one, but it's probably more, you could probably see it on a 60-minute chart a little better. There. And now here's our second target, 653. So, and if we go to a 60-minute chart, let's see if, yeah, see the 60-minute chart was exactly what happened. We go from the swing high, and we just pulled it back as the 60-minute chart was pulling back, and now we're having our continuation. So 653.05 is the next target. So that's what I use these for. And for example, again, a 60-minute chart. So examples, you don't even have to use that for a trade entry. You can see that for a pattern target, right? For example, here you have a contraction pattern. You have a lower high and you have a higher low. So I could have said this is a large time frame contraction pattern. Where is the price going to go? Well, here's our targets, right? It's almost at the target high, the fourth target high of this contraction pattern. So now you know where there's likely to be some resistance. So that's in essence what you can do with these swing high and swing low markers. Okay, guys. So I think that's basically it, and I'll talk to you soon.